Hi guys, welcome back to my YouTube channel. It's your boy Emmanuel Care, and today we'll be talking about stock market. What is stock market? How can you buy stock? How can you buy shares of a different company? How can you make profit from buying shares of a different company? So let's start. What is a stock market in general? Stock market is just a place where people can exchange the ownership of different types of shares or different types of stock. And where can you change this place? In Kenya, you can change the ownership of stock, or you can purchase a stock using Nairobi security. And before you buy a particular shares in Nairobi security, there are some things that you need to have. For example, what do you need when you want to buy shares in Nairobi? You need to open a CDS account with a brokerage firm that is listed in Nairobi security. With that one, you are guaranteed safety that the brokerage firm is regulated. And there are different types of brokerage firm, and my best and favorite one is Diane Blair. With Diane Blair, they answer the messages instantly. You text them within 1 to 2 hours, you'll get replied. Whether you call or text them, you will be replied within 2 hours. So that's why I love them, but I'm not advertising them. This is not a paid promotion, so I'm just saying because I've worked with them. I've invested using their platform. So what do you need when you go to open a CDS account? You need your ID, you need a bank statement at the same time, and at the same time you will also need the bank statement. Opening a CDS account is easy. It's just similar to that of a bank. While you have after submitting your things, you wait for 5 business days and you will receive an email telling you that your CDS account has been opened. And with that one, you will have account where you can send your money. You can use your CDS number to access the Nairobi security using that particular firm that you open account with. And what do you need to know about shares? Shares are bought in slots of 100. You can buy a minimum of 100. You cannot buy shares worth less than 100 in Kenyan's market. At the same time, there are also different things that are offered in when opening account. There are different types of account. We have cash account and margin account. In margin account, you can be given a loan up to half of the amount of shares that you want to buy. For example, I have $1 million and I want to buy a share worth 2 million. With the margin account, the account will be the brokerage firm will be able to lend you another 1 million to buy that particular shares. But the only challenge with the margin account is that when the share price drop, you will be forced to add certain amount to make sure that you keep your portfolio or shares of that particular company that you bought using a leverage within 30%. Within 30% of that amount that you are lent. For example, if you are lent 50 million, you should be able to maintain that 50 million, and you should be able to maintain 30% of that 50 million. And that is the challenge. For example, because if the shares is dropping drastically, then you are going to lose a lot of money through topping up to maintain the amount. Another type of account, we have a cash account. With cash account, you have to pay in fully before you purchase a particular shares. And there are also categories of accounts. You can open a personal account, and you can also open a joint account with your partner or with a company where you can invest as a team. With that one, you will have with that one, I think now you know everything that you need to know about how to open a CDS account, how to have and how to start your investment. Because when the account is open, immediately you will be given account number which you can use to start investing. You can send money to that CDS account. You can send money to your CDS account using M-Pesa. You can use banks, whichever you want. Then log into the account. You will see the money reflecting in your account. From there, you can buy different types of shares. And in Kenya, the shares are offered in slots of 100. So you cannot buy shares less than 100. So they are sold in slots of 100. You can buy 100, 200, 300, 1,000, 10,000, 100, 50,000, 100, or even a million, depending with your amount of your capital. For example, let's say you want to purchase you want to purchase shares of Safaricom. At the moment, you will need 1800 to purchase shares plus the commission charged by the brokerage firm. So you will need around 1800. Let's say you will need 1880 or 1850, and you will be able to purchase 100 shares of Safaricom, or you will need 1280 or 1250 to purchase shares of ABSA, or even 1380 to purchase shares of cooperative banks. You should not be scared of investing in stock market, saying that in stock market it requires a large amount of capital. You can start slowly by investing. Imagine only 1,800. There are even some shares that you can invest only 500. Something like Canary Insurance, CIC, KPLC, Kengen. You only need 200 to 500 to start investing. So there's no reason why you should say that you don't have money to invest in a stock market. Another thing that you need to know: when do you buy shares and when do you sell? I think this is the most difficult question asked by several people, and is the most difficult question to answer, because people will tell you buy when low, sell when high, and you will ask yourself how low or how high. So in simple term, when they say buy when it's low, you can log into Wall Street. With Wall Street, you will be able to see, or you will be able to track the past performance of a different types of shares. So with that one, you can also be able to access the past performance of COP over a period of 1 year. So with that one, you can go to the graph and see what was the highest amount that cooperative bank achieved last year to this year. From last year to this year, what's the highest, and what is the current market price. With that one, you will be able to know when was it selling high, or is it selling high at the moment. With that one, you can know when to buy when it's high and when to buy when it's low. That's the easiest method. But before you even buy the share of a different company, make sure you do a little research about it so that you don't make loss. Maybe the share might drop because the company is falling. So that's the reason you must do a little research to know whether the company is falling or they are facing a minor problem that can be solved, and the shares of that company can go back to where it was, or can even double. So those are the things you need to consider before purchasing share. And when do you sell? The same criteria. Most people will tend to sell when the company shares are dropping, and that's why you'll be told buy when people are selling and sell when people are buying. People will in most situations, people always buy a share of company that is already high, thinking that there will be another fool to buy when the share go even higher. You see, so sell when people are buying. When the shares of a different company goes from 20 to 50, many people will start buying that share at 50. Then that's the best moment you sell the shares and get away with your capital gain. Another method of timing the market, we call this cost shillings average or cost dollar average. With this one, you buy a particular type of shares uh, continuously or within a specific period of time, and you commit to buying that piece of shares every month. For example, you can say, I'll be buying shares of a COP every month. I'll be buying 6,000 of it. So you commit yourself to buying 6,000 shares, or 6,000 shares worth 6,000 every month, and you will see the progress. With that one, it will help you to overcome the problem of buying when the shares are only high, because within a year the shares always fluctuate. Sometimes you will buy when the shares is low, when the shares are low. Sometimes you will buy when they are high, and with that one you will be able to get the average within a year. So you will be buying on average price. So another thing we need to discuss: how do you earn from buying shares? You earn from buying shares in two different ways. The first way, through capital gain. When you buy when it's low, you buy, for example, Cope when it's 10 bob and now it's trading at 13, then you will be able to make a profit of 3 bob, 3 shillings per share. So let's say if you bought 3 million, if you bought a million share, you'll be having 3 million in your account. If you bought, you will be having share worth 3 million. If you bought 100,000 shares, your shares will be worth 300,000. So that one will be called capital gain. Another way that you can earn also from shares is through dividend. Different companies always pay dividend of different rates. For example, I think Coop Bank pay 1.5 shillings per share. KCB pay 3 bob, used to pay 3 bob. We have Equity paying 4 bob per share. NCBA Bank paying 4 bob per share. We have Williamson T paying 30 bob per share this year. I think Standard Chartered is also paying 30 bob per share. So you see, for example, if you have 1,000 shares and Williamson T is paying 30 bob per share and you have 1,000 shares, that one you will be earning 30,000 per year through dividend. And another question people asked me a lot on my social media, they asked, are the Kenyans shares, for example, are Kenyans dividend and capital gain subjected to tax? Yes, they are subjected to tax, and the tax for capital gain if 15%, if I'm not wrong, it's you pay government 15% of on capital gain, and on dividends you pay 5%, but it's still worth it because, for example, somebody owning a million shares and the company like Williamson T is paying 30 bob per share, you see that one you will be having 30 million. Then if you calculate 5% of 30 million, it's not that big, it's a little. So you can make good money with shares. Another thing, are stock market risky today than it was tomorrow? Yes, I can say yes and not at the same time, because they are risky because economy is always changing. There's inflation, there market recession, and as we continue, things are getting tougher, meaning a share that was worth 10 bob, maybe it might grow from 10 bob to 15 bob, or at the moment when you're purchasing it, the price might be higher. So when you buy it today, the price might go down and you lose money. That's why it's called a risky investment. But at the same time, you can buy it at 50 bob and it goes to 90 bob and you make more profit. So it's risky, yes, and yes, if you don't do a diligent research before purchasing a particular shares, and also if you don't have a discipline, then stock market is risky, because maybe you will see the share dropping and you be in a hurry and sell them and make losses, when you can just relax, look on the factors and understand why the price is dropping, and know whether the company is doing well or is just being affected by minor risk, which you can wait. And again, the company shares goes up and you maintain your money or make more profit. But if you don't have discipline, you will get worried and fear will get in and you will go and sell those shares of that your company on a loss. So buying shares or buying stocks needs somebody who is disciplined, who is patient, and somebody who is always ready to learn. Make sure you learn before you understand a different company before purchasing its shares. Don't just purchase because people are telling you, Nani, so and so, go and purchase this type of shares. It will make you money. Don't do that. Go and do a little research and understand. Ask yourself, will I invest in this company if it's not giving out its shares? Can I put my money in this company? Can I be a shareholder of this company without going through the stock exchange? Ask yourself, if you say yes, then go ahead and buy that one. That one will help you even if the capital, even if the share price of that company is dropping, you will never sell that company because you love that company, you understand that company, and you will realize that the share drop is just it's just a minor thing. It's not a major problem in the company because you understand how companies operate. Another thing that you need to ask yourself, or how do you diversify your investment in stock? For example, most people, you will see that a person will be just buying shares from one institution. For example, a person will only be buying shares from financial institution, and thinking buying shares from three different banks is diversification. When you buy shares from three different banks, you are not diversifying your portfolio. Instead, you are just in the same point, because what if a calamity comes that affect banks? For example, if taxes are raised and people decide to save with different platform. For example, people withdraw all their money from the bank and put it in money market, your bank will suffer. And that's why investing in different types, investing in same institution in different with the different banks is not diversification. Diversification goes this way. For example, you invest with financial institution. You also invest in agricultural institution, health institution, technology. With that one, you can easily diversify your portfolio. For example, I buy shares of COP, I buy shares of Sasini. COP will be in a bank, on a financial institution. Sasini, agricultural institution. Kabasid is on manufacturing or industrial institution. So with those ones, such things, you will be able to diversify your portfolio. Should you invest in stock or should you not invest in stock? But my answer will be, for you've been investing in stock knowingly or unknowingly, directly or indirectly. For example, those people who are investing in a money market fund, we have a specific type of unit, or a unit called equity fund. Equity fund invests entirely on stock market. So if you put your money in a money market fund and think that you are not investing in stock, my friend, you are still investing in stock. Those who are investing in pension fund, the pension fund, they are also investing in stock market. So knowingly or unknowingly, you are investing in a stock market. And I'll tell you, the best place to invest to beat inflation and get good money is investing in stock market. And with stock market, you can earn passively through dividend, and you can also earn through capital gain. So it's up to you to choose wisely. It's your decision to make. I can't tell you that. I cannot tell you that buy this stock, buy this stock. Make sure before even you enter into a stock market, make sure you do a little research and understand the institution. Don't just go because somebody told you that, my friend, I'm investing in stock, and you get carried away and you also go and invest in a stock market. 1 week, your stock price drop and you go ahead and sell on a loss and quit the stock market. It will be up to you, not my problem, because I'm telling you at the moment, before you invest in a stock, make sure, if you don't know how to do the research, then make sure you face one financial institution, go to them, ask them, let them teach you things to do with stock. Learn about stock. Video, guys, don't forget to subscribe, like, and share for more financial literacy videos. And